Interesting day, isn't it? I would say in the markets. Well, it has been an interesting week so far. Let's see how things will go through until Friday. Well, we got a lot to talk to be honest, with everyone. So I don't want to lose any minute. Cool. So the title I've put was USA against China. Who won? Who won this? It's because it became a fight, right? It's not anymore just I would say it's not anymore just a little thing. It's actual a fight now. So when you're fighting, there's always a winner. And at this moment, who won this is what we're going to explore and why. First topic is USA can't afford a real trade war, okay, with nobody. Um, not even with, other countries, but not 100% not with China. And that's exactly what Trump is targeting at the moment. Okay, so definitely not the best enemy, let's say, to approach. This isn't a strategy from US. It's a confusion. Okay, it's not a trade war. It's a warning light, and it's just not volatility. It's a structural shift. Okay, so um, I'm really happy to be here with everyone and being able to explain that, because a lot of people are not understanding um, what is actually happening around the world and what we're gonna be looking today. It's more about a structural story and not only about the market, but it's about leverage, about dependency, and of course, global order that most investors and policymakers are still underestimating, in my opinion. So, but before we go any further, as usual, I have to put the risk disclaimer. I see a lot of, just want to take a minute here. I see a lot of new names as well today. So Surav as one of them. So welcome. Very good to have you guys here. Nakash as well. Thank you. Tings as well. Tariff, not too sure. Maybe you've been coming or not. I can't remember your name. But yeah, lots of new people. That's pretty cool. Hope you guys enjoy. Make sure if you have any questions, just send me the question on the chat, or you can even send it privately if you don't want to, maybe you think that, my teacher, I was on the school, and my teacher always say, not asking questions is dumb, because when you ask questions you learn. So having those, questions to yourself won't help you. But if you ask those questions, maybe, some other people may have exactly the same questions than you, and just, they're a little bit shy to ask or something like that. And you're more proactive and you asked. There you go. We've answered two questions, so two people questions to one answer. But yeah, feel free. Okay. If you have any questions, just send on the chat. If you don't want to send it on the, the public or for everyone, just send it privately to me, that I will be able to read and not say your name as well. Okay. Oh, okay, Tariff. Nice. Was following me for 2 years now, and just stopped trading like 3 months ago and just restarted. Okay, that's awesome, Matt. Well, welcome back to trading. Welcome back. I think you got on the right moment. A lot of opportunities, a lot of volatilities. Hopefully you have your account with ACY already set up. Otherwise, go to the website. You guys, want to start trading with ACY, definitely go to the ACY website, open a demo account with us, see how you go, see the feed, and later on, account managers will definitely take care of you. Okay, anyways, that's a lot already. Let's go for the trading here. But before we go further, I need to put the risk disclaimer. give it, leave it a minute or two for you guys to read it, and then we should be back to start. Okay, I will mute myself and be back in a second. All right, cool. Let me take this out, come back to here, and let's open FinLogix for a second. Oh, so for those who are new and don't know about FinLogix, it's like a sister company from ACY. We actually develop it, but it's another company. It's not ACY, it's FinLogix, but it's the same group, and we basically built that from the scratch, because we know what traders want. We know that trader wants something fast, quick, reliable, and there we go. FinLogix is the go. It's free for use. You don't have to pay anything. You have a bunch of features, like Wednesdays. We do webinars trading, so we use the FinLogix to be able to trade that, because we have an indicator called market sentiment, where we can see the position of the retail traders, and we can just trade against them. If you find that sort of interesting, come back tomorrow and we can definitely have a chat about it. Anyways, so I want to open the webinar officially with a quote from Napoleon, right? And it goes like that: never interrupt your enemy when he's making a mistake. Never interrupt your enemy when he's making a mistake. I was reading a book and about war, in a sense, and that was the quote that was there from Napoleon, and it's kind of interesting because China right now has the front row seat for the cinema, let's say. I even sent yesterday a little meme, let's say, from Trump and sorry, USA China meme tariffs. I think it's here. Let me go images. Well, it's not anymore. I can't find where I can't remember where I found that. But anyways, this one is pretty good as well. More tariffs, more tariffs, more tariffs, more tariffs, and it goes like that forever. Anyways, I think that China is the winning here, and because last Friday night, almost under the radar, not many people know that, but the Trump administration have announced that its newest wave of tariffs wouldn't apply to critical categories like the smartphones, laptops, and semiconductors. Okay, this headline is everywhere. So tariffs not apply to laptops and smartphones, etc. We can see that, right here, US exempts smartphones, computers, and other electronics from Donald Trump reciprocal tariffs. That was last Friday. Okay, so that was three days ago. It's in Portuguese, but it's three here, right here, days ago. And anyways, you have a bunch of headlines talking about exactly the same thing. That now, pretty much electronic categories have been, let's say, wouldn't apply to the tariffs. Now that may sound like a win for consumers, right? Because if we think about, oh, that's so good, lovely. Now an iPhone will cost cheaper because the tariffs won't get affected. If you pay like attention, it's actually a very big red flag, because it's revealing for us something much more deeper, much more dangerous, and that's how strategically exposed the US economy really is at the moment. So let's go. I want to do something here, but before we go further, I want to show the apple.com.us. I think USA. Does anyone know the Apple USA? There you go. PL. No. Where is it? iPads, iPhone. I want to show something very quick. Yeah, that's the one I want to show. Okay, so this is from Apple, not from Australia. Okay, Apple Australia is different. Apple.com.au. It's different prices. You can see it right here. If I come to store iPhone, we see that it's different from Australian dollar, $1,800, and from USA, it's $1,000 US. Okay, so it's not Australia, it's actual USA, and that's exactly what I want to show everyone. So this is basically Apple at the moment, and why I'm using Apple for this example, because Apple is the biggest producer of electronics. 75 to 80% of USA uses Apple related products. And a really simple measure for us to see how bad they will be looking in a few months and a few years is look at the price of the products. The newest iPhone, the iPhone 16 and the iPhone 16 Plus, it's costing about $800. Okay. The Pro and the Pro Max, it's costing $1,000. So $200 difference. Okay. So let's round it up this one. But yeah, $800 and $1,000. So $200 of difference, or $199 of difference if you wish to say that. But if this year we're going to get the new release, and usually the new release of Apple comes around $1,000. Okay, usually what is the price of a new iPhone release? And you can see, if that doesn't come in Australian dollars, yeah, well, it's saying Australian dollar, USD. No, let's just do like this by S. It's around 1,250, 1,400, 400, 600, 800, and then 1,000. But that's different models. So if we just want to take the 16 Pro and the 16 Plus, it's around 1.2 to 1.6 to 1.8 Australian dollars. So if we do AUD to USD, we get 1.2, so around 700, sorry, not 1.2, what was the price? 16 plus 1,600, 1,800. So 1,600, 1,000, 1,800, 1,100, okay? So right now it's costing 1,000, but usually on the release it costs between 1.2 to 1,000, okay? With the new tariffs that Trump was trying to impose on electronic goods, that would be coming more likely $2,000. One iPhone on US, 2,000 US dollars. Okay. So look at the price right now is $1,000, and look at the price of the new release of the iPhone in a few days. Or sorry, in a few months. It's going to be released on September, usually September, October. Look at in December, November. I'm not 100% sure, but I'm 90% sure that it's going to be costing very close to $2,000 and not $1,000 anymore. Okay, 50% increase. So 100% increase, sorry. So that's how tariffs get, okay? So it's not good for the consumers. It's really bad because things are getting expensive, okay? Anyways, so despite all of the, tough talk on the trade, USA can't afford a real trade war with China. And it's not because of the politics, but it's because of the physics, economic physics, pretty much. So let me try to put this in on a very simple way. 87% of the iPhones are made in China. Okay. 80% of iPads are made in China. 60% of MacBooks are made in China. So basically more than 8 in 10 smartphones, they are imported into in the USA, they are coming from China. And that's not leverage, that's dependency. Okay, that's not leverage, it's dependency. So my opinion is USA is really attached to China, and basically what Trump's trying to do is get away from China, but he can't because it's too rooted already. Not only USA, but if we look to Brazil, if we look to Australia, if we look to South Africa, if we look to other places, we know that these type of places, they are related, that they have a big dependency on China because the free commerce, it's easy, it's cheap, it's fast, we can produce many as we want, and the tax is cheap. So think about it. It's too rooted already. It's a big problem. Okay. So what happens when you threaten to put more tariffs on those products? Well, you're not going to hurt China. You're going to hurt Apple. You squeeze the US retailers. You spike inflation. And of course, you will hurt the society. You will hurt the American consumers. And that's exactly what is happening and what just began to happen. Basically, it's not that's what I'm telling you. It's not a war anymore. China already won. I mean, come on. It's clear as as clear as crystal. It's really simple to see that. Now, why does all of this matter for for currencies? Well, let me just give a step back and and do something that I haven't yet mentioned. But in response to that, the USA administration pretty much they came back and they were like, oh gosh, okay, we did a big mistake here. How are we going to correct that? Well, exemption on other countries, excepting China. Then they walked back. Right. So basically they're like, oh, okay, we just really, I can't say this word, but we F everything. Okay. So it's not good for us. What should we do? Okay, listen, let's do this. Don't tariff smartphones or any other electronic goods. But what we can do is we can keep China tariffed and we stop the other ones for 90 days. Perfect. That's exactly where we are at the moment. So 90 days pause for Australia, Brazil, Europe, German, everyone except China. Well, that's a big problem because customs officials, pretty much everyone was left in the dark. Okay, retailers, they began to raise the prices just in case something happens. It wasn't a really good strategy. I think they had to act under pressure, like Trump administration had to act under pressure. So pretty much the USA economy is collapsing. It was so confused. It was so like improvised. That's the word I want to use. It was very improvised. It was an improvisation of, okay, we don't stop China, but we stop everyone else, and things should be good. Well, it's not like that. And what about China? Well, they're just, as I say, they're on the first row. They're literally on the first row of the cinema. Cinema, cinema screen images. They're literally on this first row here. They're right there and watching USA scramble the economy, putting the economy every single day down and down and down. And that's not me. Who's saying? That's exactly the S&P 500 going down, 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 down. Okay. So if we think about, my friends, China just won. Okay, China just won. And investors are looking to it and they're like, "Oh, I don't want US dollars anymore. I want Chinese yuan." So what's happening with USD Chinese yuan? Anyone knows? Well, guess what? Guess what? Chinese yuan, very, very strong. Very, very strong. US dollar losing track. Okay, because if we actually think about, no one wants to touch US dollar anymore. Okay, it's just because let me just put back here the XY. There you go. So just so you know, no one wants to touch that anymore. It's really below 100,000 now. Okay. Anyways, now why does all of this matter to forex? You know, as I say, well, think about it. I think someone sent a chat. Let me check. Aditya said, my economic teacher was saying that by this trade war, China is also helping its deflation. So it's a win-win situation for China. Exactly. Exactly. Yeah, that's exactly what I say. China has won, my friend. Don't even try to, fight back. It's too much leverage. The USA, it's too much leverage into China. And in a sense, it's good, but in another, when you're too much into something, you're not looking at, around you. It's really bad. So now, again, what does that matter to forex? Well, because the trade currency, all joined at the hip, when the country or when one country relies too heavily on another, that's the leverage dependency, for production, for production it's good, or even its financing, the balance of power shifts, and of course the value of the money shifts as well. So let me try to break it down so you guys can understand a little bit better. So the US runs a chronic trade deficit. So that means that they import much more than they export, and the dollar flow out. Um, and if those imports suddenly start to cost more because of the tariffs, then the price they pay here, the price that they pay there will go up as well. And then the consumer demand often doesn't drop. So that's a really, that's a receipt. I would say it's a receipt for inflation. And inflation, as we know, will be eroding the purchasing power of the dollar. So that's not where the story ends, because China holds more than 800 billion into US government debt. That's a very, very significant share of the US financing pipeline. So if China chooses to reduce their purchases, or worse, if they want to sell off the US debt, it will put additional pressure on the dollar, and basically borrowing will become more expensive. Imports will get more expensive as well. Inflation risks will go crazy. And then suddenly the very, very foundation of the economy model will start to crap. You start to crack. Sorry, crack. And that's what I'm telling everyone already for months and months. This isn't any speculation. I'm telling you facts. It's happening. Open your eyes, look at it on your side. It's actually happening. It's something palpable. You can actually feel that happening. And here's the irony. The tariffs, it's not even working. So let's say you want to make laptops in the US now. Well, you still need to import the key Chinese components. what about those components? Well, some are now facing tariffs as high as 145%. And and as a finished Chinese made laptop is taxed at just 20%. So it's actually cheaper to import the whole product, the final product, than to build it locally. So that's the opposite of what tariffs are supposed to do. And I think I don't know who's taking care of that, but it's doing very, very wrong. And what about the knock-on effects? Well, they're hitting everyone. Okay, companies, they're delaying investment, supply chains are paralyzed, shipping costs they have exploded to the moon. Some business, now paying $29,000 per container, and that's not sustainable for a small business. Not even close. Okay, not even close. The strong issue, Cherry say that the stronger issue also is that US losing credibility. So even the dollar as a reserve currency is at risk. 110%, my friend. US dollar is gone. That's what I've been saying on my videos. I say that US dollars don't even think about the US dollar at the moment. Maybe in the future can come back to be, but at the moment is a safe haven. It's not. It's a really crap at the moment. Japanese yen, Swiss franc, and gold has been reacting to be a a real safe haven. I mean, real money is flowing into Japanese yen since last month. Japanese USD JPY would definitely go to 140, in my opinion. Nakash Mehmod say one of Trump's speech, he said that I want to weak the US dollar. My question is if Trump for increase its exports mean manipulation or a real mistake? That's a really good question. So basically you want to know if what he's doing is he's really trying to weaken the US dollar or he's trying to manipulate. By the way, if China is benefiting, Australian dollar will be strong. Yes, Australian dollar is strong. So if we look to AUD USD, Australian dollar is really, really strong. Okay. Besides that drop here, USD has been strong. Australian dollar CAD as well. It's strong. AUD Japanese yen, it's the only one I wouldn't recommend you guys to be looking to trade that one, just because Japanese yen is very strong. I guess USD JPY would be my next trade. Going back here to 140. I've been with this orange line for a few days now. Australian dollar in a risk-off environment is hard to trade. Yeah, I agree, Tariff, and I believe US dollar. Oh gosh, US dollar CAD can probably go to 90. Okay, I just did a Fibonacci expansion here for the break of this sort of like a 1 hour. Jesus Christ, how many ads of this 1 hour break? So up, down, break here, bottom. So Fibonacci on the top, the bottom, first target hit, second target, third target, and then push back down here. Okay, that's my trade. I have some long trades. I have some long positions around this area as well. Let's see how this all go. Let me take this off. Not too many trouble. Yeah, okay, cool. Actually, my opinion is 90 cents. Okay, I think 90 should be the one. But let's see how it goes. Anyways, so as I was saying, business are now paying like 29 grand, 29,000 for a container. I knew that one of my mates, me and my friend, we were looking to open actual, like an actual business, and the business would be importing from China and selling into Australia. We were gonna import drifting car parts, like drift car parts. These things here, like these, this type of things, because it's a good business if you are on the community of drifting, or of cars and etc. Because those type of parts, they get wrecked pretty much every second. And then it's just like a fiberglass sort of part, fiber fiberglass like this. So they're used to, you pretty much can go there and destroy and then just replace it. And it was a really good business. We was gonna pay like $100 and we're gonna resell it for 600 in Australia. Container was costing 10,000 and now it's costing 30,000. So it's really, really expensive. So there's literally no sense for us to be willing to go ahead with those type of business. So a small business can't survive. I mean, I think cash flow wise, quarterly was going to be 40,000. So my profit was going to be to buy another container. So I was going to be living in cash flow, and that's not how to build equity on a company. Anyway, so story short, long story short, it's really escalating very, very quick. Anyway, so if we look to Wall Street, meanwhile, it's getting, whiplash. So one day it's up, one day it's down. And it's, the consumers are very on the middle of it, stuck between rising prices, declining clarity. I think this is going to be really, really wild in the next couple of months. And of course, all of these happening while the US racks up more debt, fewer reliable buys. As I said, and as I've been saying into Telegram, into the videos, this is not a trade war. This is not a tariff war. It's a warning light. It's who's the best. It's flashing bright red on your face. Because what we see now, isn't about tariffs, it's about leverage and how quickly it can shift. I think the US deeply depend on the China for production and equally depend on global capital, including China, for financing as well. So what's my strategy? Well, it's pretty much been buying gold, buying Japanese yen, buying Australian dollar as well because of China, but not for long though. So that has been my strategy in the middle of that chaos. I think because US strategy is driven by improvisation, right, and not long-term planning, and that's a very dangerous combination. Tariffs were supposed to show strength. Instead, they're revealing a lot of weakness. And China, along with the rest of the world, is just taking notes. Remember what I said in the beginning of this. If your enemy is committing mistakes, don't stop him. Okay? Never interrupt your enemy when he's making mistakes. That's from Napoleon. So I guess if we zoom out, Tariff, I'm gonna read this in a second. Let me just finish my thinking line here. But if we zoom out, if we zoom out, because isn't just about 2025. It's not about Trump versus Biden, or it's about Trump versus China. It's about the next decade of the economic architect, because this what he's doing right now, it's gonna impact the next 10 years, 100 years. Okay, so it's wild. It's really, really wild. A lot of investors are stuck in what they call the recency bias. So that's the belief that because the markets bounced back in 2020, they will always bounce back. But we're not in 2020. It's not COVID. It's looking much more like 1968 here, in my opinion. I think today we're starting at a very fragile monetary system that is straining under debt, inflation, and geopolitical fragmentation. So Ray Dalio is not alone when he says that the current order is breaking down. I don't know if you guys have heard about the next order or the Ray Dalio. Okay, there you go. So changing word order. That's exactly what he's been saying. So was Netherlands, and then United Kingdom took off, and then United States took off, and then now China. So it's happening in front of your eyes, okay? And I think we're getting wrecked. And I think US is going down, 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 baby. Sell, baby, sell. One of my friends say that. Anyways, so you just need to look at the signals, like inflation adjusted bond yields are at the highest since 2008. Global trade volumes are falling, they're not rising. S&P 500 is still overvalued by historical standards. Investors' confidence is leaking into Europe and emerging markets. Volatility levels, come on, they're exceeding crisis threshold at the moment. And what's fulfilling all of these? It's the core. It's Trump economic agenda. Whether he returns to office or not, it doesn't matter. His policy approach has already influenced the Republican base and the market expectations. So it isn't just a rerun of old tariffs. It's the new playbook. Strategic tariffs that seeks to deglobalize supply chain, a push to onshore production regardless of the cost, rising tensions not only on goods but on rare earths, minerals as well, metals, tech services, a lot of things. But the market aren't just price it in. Only 14.6% of investors currently expect the tariffs to last more than 6 months. If that's wrong, well, there's serious downside ahead, I guess. I mean, gold has already outpaced stocks 2-to-1 since the year 2000. So demand for it, especially in China, is booming. If we look to S&P 500, it's trading as its current supply chain factors are temporary. So what's the permanent? That's what I'm being saying. All the money I'm moving to gold, Japanese yen, and CHF. Forget about the US dollar. Forget about the US dollar. Yeah, I think I think people like Jem Carson, they're already calling it 35 to 45% drawdown in S&P 500. Return to stagflation, where stock prices go sideways, but the inflation pretty much silently destroys the real returns. Guys, this isn't just noise. It's a regime shift. Wake up. Jesus. If we look beneath the portfolio, it's slowly but meaningfully, all of the money are turning out from US. Okay, they're getting out from there. Slowly but surely. So what should we take away from all of these? Well, trade policy isn't just about trade, I guess. That's my take. It's about currency risk, inflation, investment flows, structural vulnerability, dependency, leveraging, extra leveraging, I would say. And then that the US, for all of its strength, it's more dependent than it admits. And that the real strength won't come from posturing, but from building resilience and in production, in policy, building an actual strategy and not working on oh, we're going to do this. Yeah, do you think it's going to work? Nah, but it's going to work for 2 weeks. Okay, cool. Next 2 weeks, we do another thing. So, they're improvising, and improvisation, it's not planned. It's literally, okay, let's do this. Yeah, guys, stay sharp, think bigger, watch the leverage, and take care. Yeah, that's all I can say. Because in this type of environment, who depends on one would decide everything. Um, Let me see Tariff question. Let me just drink some water. Okay. I'm trying to understand why the Japanese yen hasn't been as strong in recent risk-off environments, especially compared to traditional safe havens like the Swiss franc and gold. Even true Japanese yen is in a more hawkish stance, while HF remains dovish. Could you explain why that might be? Really good question. Um, in my opinion, I I, I think there's one big thing from Japanese yen from the Bank of Japan that is creeping a little bit out from real money. If we look to USD JPY, for instance, see that's beautiful, right on the first target, USD JPY. If we look on the daily, just zoom out a little bit from the picture. What I've said of 140 is nothing like crazy. We've been there 3 times already, like here, and here. So it's not crazy. But if we look for US dollar against Japanese yen, definitely Japanese yen is much more stronger. If we look, for instance, Australia, like China-related economies, it's not going to be the same strength as not China-related economies. So my take here is, I think that the real money watching markets at the moment is a little bit uncertain what can possibly happen with the Bank of Japan. Yes, they are on a hawkish. Yes, the inflation kept going up. That's good. That's really cool. They're gonna increase rates, but uh, Bank of Japan, you have to remember, it's a really, really, really forward guidance sort of economy. Kuroda always says something and then he doesn't do it, and then he comes back and then he do it. So I don't want to buy more uncertainty. I don't want to buy a thesis that it's uncertain. I want to buy something that I know it's going to happen. And CHF has been really, really strong for the past years and years and years. Have you ever like heard about something going wrong on Switzerland? I mean, I haven't, you know. So that's the whole reason. I think there is still some sort of uncertainty into BOG, but not sufficient to real money just buy that and buy and hold the Japan. But Nikkei has been pretty good in the sense of less worse than the S&P 500. So the my opinion here would buy Japanese yen, but deleverage that and try to use more as a hedge into your portfolio if you have like euro dollar longs, for instance, or if you have pound dollar longs, for instance, or Aussie CAD longs. Try to short USD JPY just to get a little bit of leverage on top of that. I think those type of pairs would work pretty well coming into the next weeks. One thing that I wanna just mention for you guys to watch out and really, really have to sort of watch out is the yuan, the Japanese the Japanese yen is becoming the new gold standard. And we don't have official figures, but for the past 7 or 8 years, refineries from Switzerland have been running at full capacity exclusively for China. Sorry, Chinese one will become the new gold. So USD Chinese one is a good short as well. But I think we should watch out for when the US puts pressure on Japan to raise its interest rates, and we have to be bullish on pretty much all Asian currencies and indices if you can. like Australian dollar, New Zealand, Japanese yen, Chinese yuan. I think that would be awesome. Aussie dollar will go to the moon. Okay, 68 most likely by the end of the year. I don't think USD will go low as people all think, no matter the trade war. Trump winning or losing, the trade war will come as surprise to market when US dollar will boost higher. My advice, traders, be caution when trading USD pairs. That true. Even for me as a smaller portfolio prefers HF to stable economy than the uncertainty of the West. I think the dollar could reverse from 98. Yeah, look, I can't give financial advice, but yeah, just watch out. I think US dollar is lost. That's all I can say. I think Tariff sort of got what I mean. Yeah, right, guys. Thank you so much. Hope everyone have a good week ahead. Um, and yeah, take care. Stay sharp. Think big, and I see you tomorrow. See you guys. Have a good day. Bye bye.